What's going on, my friends? Butcher Wall Street, Marcel coming at you here. Let's talk AMC and APE reverse split. Let's talk conversion. Let's talk lawsuit. Let's talk settlement. I have so much to discuss that I think we're just going to go open format today. I think it's best if I just let you guys ask me whatever the hell you want. But let me make sure that you can hear me, because I don't have a headset on right now. Give me a thumbs up. Drop me a note in the live chat and let me know if you guys can hear me okay. What am I drinking? Seltzer water. Blood orange seltzer water. Loud and clear, awesome. I'm kind of home alone right now. You're going to hear the dogs in the background a little bit. It's going to be probably the most casual stream I've ever done. Even though I'm wearing this shirt, whatever, it's comfortable, I don't give a fuck. I got some fucking funny questions in there. Let's keep it relating to the reverse split, all right? What kind of dogs do I have? I got a pointer mix and a lab mix, and they're pretty awesome. Willow, Penny, come here. Come here, girl. Come here. Come on. Come up here on the couch. Want to say hi? Come on. Yeah, you're way out of breath. Atta girl. That's Penelope. She could be staying with my cousin for a little while, but she's here. That's my girl. It's my lab mix. Yeah, thanks, girl. Come on. Oh, save it for later, huh? That's a good girl. But yeah, let's scoot over. Let's talk. Hey, all right. Yeah, okay. She doesn't want to get off me now. I was going to go outside for a cigarette. Ape Henry asks, my fear is that after the reverse split, we're going to come down to the same levels we're at now. Oh, my friend. Back up. Back up. Let's go. There we go. I guess that's a valid concern. It's a valid concern to wonder if after the reverse split, we can get to the same levels that we're currently at. But I'm not entirely worried about that. You see, the shorts spent a lot of money bringing this bitch down right now to $1.96. A lot of money. You want to know how much? Let me start by saying this. Do you know what the average? Do you know what the average date? Sorry, not the average. The days to pay is like on this stock? The days to pay and the days to cover is absolutely huge. It was 64 days. 64 days to cover, according to Ortex data. That is absolutely massive. Massive number. You heard me, not 6, not 4 days, but 64 days to cover. Now those numbers are changing a little bit here with the Ortex data. But I just looked at it a few minutes ago. We're looking at 64 days to cover. Today alone, you know how many short exempt shares were traded? It is an all-time high of 6,300,000 short exempt shares. Let me set this down. I'm not carrying it around. That number is astronomical. Do you understand? It's not high. It's not ridiculous. It's fucking astronomical. Okay? 64 days to cover, 390% average cost to borrow, 6.3 million short exempt shares, not short shares, not shares sold short, but just the ones that required a short exemption. And that short exemption is used to trade a stock and short a stock downward in the middle of a downtick, regardless of SSR or Reg Show threshold securities list. Because a market maker can short a stock even with no shares available using short exemptions. Does that make sense? For the last few months, we were looking at an average of around 8 million to 10 million shares, total volume. Today alone, we saw 190 million shares traded. The vast majority of that was by institutions. $190 million shares traded today. Out of that 190 million, you want to know how many were sold short? The short volume today was, to the best of my knowledge, an all-time high, 88%. 88% short volume out of 190 million shares today. I'm not making these numbers up. Go look it up for yourself, all right? So when I'm seeing 190 million shares traded, and of that, 88% of those shares were sold short, that's a big red flag as far as telling me how desperate these shorts are. And on top of that, if you go to a company like Fidelity or Webull, you can see how much of the retail volume was buying or selling. Looking at Fidelity alone, 82% of retail investors on Fidelity that traded AMC bought shares. Bought shares of AMC. I was going to say or options, but I'm not sure if that volume includes options. 82% of all trades on Fidelity today by retail investors were buys, and only 18% were sells. Oh yeah, on balance volume. On balance volume is at levels that we haven't seen since January of 2021. 5.4 billion is the current on balance volume. What does that mean? On balance volume means how much retail is currently buying, selling, or holding. And the higher that volume, the more retail is holding. The lower the volume, the more retail is selling. So, short interest, in addition to that today, is up to almost 29%. And that's just self-reported data. And that's only 85% of that self-reported data provided by Ortex. So almost 29%. Yesterday it was at 27.75. So they increased the short interest, the self-reported short interest, mind you, and only 85% of it, by 1.25% from an already extremely large 27.75 to almost 29% today. Damn. We're going to be so fucking rich. I don't even know how else to put or explain the too long didn't read. That's the TLDR. Now, I'm not a financial advisor, and this is not financial advice. I'm not telling you to buy, hold, or sell anything. Do whatever the fuck you want with your money. But I own hundreds of thousands of dollars of AMC and APE shares and call contracts. I am not short the stock, either of the stocks. I do not short or buy or sell puts on AMC or APE or AMC1 or AMC2. That being said, I have a vested interest in supporting my favorite stock. And the reason it's my favorite stock is because AMC, just based off of fundamentals alone, is worth $30 a share. Easily pre-split. Pre-split. And today, it was $1.96. Wow. So, I have bought shares from February of 2021, January 2021, all the way through today. I bought them when they were at $10. I bought them when they were at $76. And I bought them when they were at $1.96. Sewell says it dropped to $1.96 based on nothing. You know what, my friend? It is based on something. You want to know why AMC dropped to $1.96? Because today, there's a 1-for-10 reverse split. That means that now, AMC is worth $19.60. Shorts understand that eventually they've got to close positions, even if it might take a long, long, long time. Because they're not in a position where they can decide, I'm just going to close out my shares now because I don't want to be insolvent. Because if they closed out their short positions now and bought back the shares that they sold but have not yet purchased, they will already be insolvent. And the rest of their hedge fund buddies would as well. So there's absolutely no choice. But by bringing the price down to $1.96 today, that means that after the reverse split in the morning, AMC will be worth $19.60. Dustin Smith, when do the shorts have to close? To answer your question, the shorts have to close when they get margin called. Until then, they don't have to close. But that's okay, because I understand this. And they do not change the due diligence that I've done. The stock price does not change the due diligence that I've done. I've bought from 10 to 76 and back to $1.96. And in the morning, when AMC reopens, it'll be for $19.60. And one day, whether it be due to lack of collateral, lack of liquidity, some other major issue, a reverse split, conversion, issuance of shares, or paying a dividend, at some point, one of these short hedge funds is not going to have sufficient collateral and will be margin called by the broker-dealers, the clearinghouses, the prime brokerages, which means big banks, that lent them the money. Much like what happened to Archegos. As a matter of fact, that's exactly what happened to Archegos. Because Archegos held a massive bag of AMC and GameStop shorts. And for those of you that don't know, Archegos is now bankrupt and insolvent. And their prime brokerage, Credit Suisse, through the use of legacy issues, legacy means long-term financial issues, inherited those positions because they're the prime brokerage that lent Archegos the money. And I don't know if you know what happened to Credit Suisse, but if you look up their ticker, they're delisted. They're insolvent and they cease to exist. They got bought out by UBS, and UBS, the only way that they agreed to buy them out was if the, I believe, Swedish or Swiss government, pardon me if I forgot which one, the Swiss government, I believe it was, agreed to bail out UBS for $9 billion in losses due to these legacy issues. UBS has not yet closed those same positions that Credit Suisse had that made them go insolvent. Credit Suisse did not close out those positions that Archegos had that made them go insolvent. So now, these exchange-traded funds that are heavily shorted, the stocks themselves that are heavily shorted, the ISDA contracts and swaps and rehypothecations against these stocks have not been closed out. They've been kicked further down the can. These over-the-counter trades have absolutely fucked them. And UBS is holding on to them for dear life, trying to figure out a time to close out those positions, as are many, many other brokerage firms. Now, no, Dust Division, that's not true. UBS has not returned the $9 billion because UBS has never borrowed the $9 billion. That's not a loan. That's a bailout, man. And I'm sure a lot of people don't know this, but that bailout does not get given to UBS until they've already lost $9 billion. So if they lose $18 billion, for example, in closing out those over-leveraged Credit Suisse positions, the Swiss government will give them the $9 billion back. So now that I've explained a few things, and this is not just UBS, this is not just Credit Suisse, this is an absolute literal fuck ton of short hedge funds, short family offices, broker dealers that lend them the shares, prime brokerages that lend them the money with which to short the shares, and clearinghouses that don't have sufficient shares. Citadel, the market maker, for example, has over $65 billion in securities sold, not yet purchased. 65 billions with a B. Virtue Financial has, I don't want to lie, I want to say it's around 48 billion, but somebody fact check on me, in securities sold, not yet purchased. That's over $100 billion just from two market makers alone in short positions and securities sold, not yet purchased. AMC is the most heavily shorted stock on the market. So now, I've explained a few things. It's a very simple explanation, high level, and I try to explain it as succinctly as possible. Ask me any questions that you have right now about AMC and APE, and I will go through them one by one. Who paid for that house and what script are you reading? Let's go, Brandon. I never sell myself, sleep tight. I paid for this house. You fucking idiot. This is my fucking house. And it's absolutely gorgeous. I don't read a script. That shit's up here. Because I fucking know these things like the back of my hand. Because I've done my due diligence on this stock for almost 3 fucking years. Because I have hundreds of thousands of dollars invested in this stock, AMC and APE. In this investment that I have no problem waiting as long as it takes. Stephen Andrews asks, is there a $30 fee? My friend, that depends on your broker dealer. For example, Fidelity does not charge a fee for reverse splits. You have to find out from your broker dealer if there's a fee. What do you think about BRICS? Well, this isn't really a stream about BRICS Plus, so we'll get to that on the next one, my friend. All right, but BRICS is a huge powerhouse that is going to give America a run for their money. Patrick Marcel, and I mean that in an economic standpoint, because the BRICS Plus is coming out on November 1st with a dollar that is backed by gold, something that has not happened since the Nixon administration. Patrick Marcel, how much do you think the AMC shorting and other shorting like GameStop will impact the economy? Do you think the shit state of the economy has anything to do with this? My friend, I know some of you may be new to this channel, but I've been doing YouTube since July of 2021. And the reason I started doing this is because when I looked at the numbers, I saw clearly that what is happening right now with these over-leveraged banks is directly related to their bad bets. Bad bets on securities throughout the market. And at this point, this is going to be controversial. I believe AMC at some point will squeeze much higher than GameStop ever did. Much, much, much higher. And I think it has more potential to squeeze higher than GameStop ever does. Because, again, this is going to be controversial as fuck. Because DRS is not the way. There's a reason GameStop cost to borrow average is around 20%, and the maximum is around 25%. But at the same token, AMC's cost to borrow is between 350 and 1,060%. Ryan says settlement denied, 857 approval. That doesn't make sense. It does not compute, my friend. Ahmed says, I have AMC common options that I bought in the last 6 weeks. What should I expect in terms of conversion? Okay, I'm not going to get into that super in depth, but your options will be adjusted. Instead of getting 100 options, instead of getting 100 shares, you'll get 10 shares for your contract. And the price will be 10 times higher. Yanis picked up 61 shares. Absolutely great, buddy. Congrats. What happens to your calls prior to reverse split? They just get adjusted, man. Data and numbers don't lie. Let me see. What do you think of all the other content creators who quit AMC? Matt Kors even put a clown face on your pick in a recent video. I think that's absolutely fucking hilarious. I'm flattered that these tools think about me, because to be honest with you, I never think about them. I don't watch any of these other guys anymore. I don't watch them. I haven't watched them in a long time. And I've got no interest in what Matt Kors has to say because the guy knows absolutely nothing about AMC. Yes, Webull is showing the new price. How long do you think it's going to take for AMC to pay off all the debt? My guess is 4 quarters, says Eric. To be honest with you, AMC is about to issue shares. And the last time they issued shares in June of 2021, AMC ran from $13 a share to over $79 a share. And the time before that, in January of 2021, and then when they issued shares, AMC ran from $1.70 a share to $13 a share. So now, instead of issuing 11.55 million like they did on the open market, people call it dilution. I call it issuing shares and raising money, because that's exactly what it is. Anytime a company does that, they make money. And AMC has the ability to issue 25 million shares post-split. So after the reverse split, AMC can issue up to 25 million shares. That's more than 200. That's more than double. Okay, more than double the number of shares that they issued back in June of 2021 when the price ran up over 800%. I do not think it's going to take AMC long to pay off their debt. Danzo, do you think they'll short it again after the reverse split? Yes, of course I do. But before that happens, they've got to pay me my settlement, as well as everybody else. There's over 6.2 million shares that are supposed to be paid out in the settlement. But in reality, if there's any number of synthetic shares like we assumed, not even like we assumed, like we've deduced from doing our diligence, we've come to terms with the fact that they will have to issue much more than 6.2 million shares as part of that settlement. That money comes from the shorts. Why? Because shorts have to pay dividends. And when a settlement is issued like this, that money comes from the shorts accounts. Eddie Lopez asks, when will they issue more shares? AMC will issue more shares as soon as they're ready. I can't tell you an exact time. Do you think that the apes will be a force of a positive change after the MOAS? I hope we don't use our wealth like the hedges do. Hopefully to help others while also securing passive income. Yes, my friend, I hope so as well. I think that good people are going to do a lot better with the money than these hedge funds ever could. Now that the new AMC shares will be issued with the new CUSIP numbers, will the shorts be able to change the CUSIP ID on their current short shares and let them roll over? A CUSIP number change and a name change does not automatically cause them to close their positions. A CUSIP number change and a name change simply puts more pressure on them, especially when you combine it with 10 times fewer shares. So there's 10 times fewer shares on the market. That means the cost to borrow is going to go up because the share locates is going to be much more difficult. Some people inaccurately state that the shorts are going to have 10 times fewer short positions. That's not the case. The value of the shorts positions does not decrease because of a reverse split. It is simply the number of short positions is adjusted to match the reverse split, but the actual value does not change. Failures to deliver. You guys know that in the end of July, Google only had around 56,000 average failures to deliver. Apple had around 65,000 average daily failures to deliver. And AMC stock had 11.9 million failures to deliver every day. And FTD is a huge red flag when it comes to naked shorting, because naked shorting directly causes failures to deliver. Auto365 says, asks, will shorts have to close their APE positions? APE is a stock. It's a preferred equity unit. There's no they're shorting it as well, but that will roll over to their current position. So if they're short APE, they're going to be short AMC even more when that converts tomorrow. MC, I appreciate the super chat, my friend. That's very kind of you. Thank you very much. You didn't have to do that. Let's see. Do I think the SEC, FINRA, or DOJ might actually be doing something behind the scenes? I highly fucking doubt it. I highly doubt it. The DOJ and the SEC are conducting investigations, but they're like police officers. Police officers rarely stop a crime in progress. They usually come by after the fact to file reports and to issue assistance. And that's very similar to what the Securities Exchange Commission does. They issue fines after the fact. That's why for now, I don't mind holding as long as I need to hold. Eric Vogt asks or says, I see that ETFs will be buying hard tomorrow since the CUSIP changed. They'll need tens of millions of shares to fill those up. AMC float will only be 55 million tomorrow for one day, so let's go. That's true. The 55 million float will be tomorrow. When will there be a new options chain? Chad, the new options chain will be available in the morning at market open, most likely. Penny, back off. Atta girl. Brad Hansen, also known as Regulation Show, the alternative uptick rule. This rule includes a circuit breaker that takes effect. Yep, that's true. Regulation Show is what prevents them from shorting a stock on a downtick. However, short exemptions, today's all-time high, 6.3 million shares sold short exempt. Not just short, but short exempt, meaning they could sell them short on the downtick because their move was specifically to bring the price of AMC down because they know that they're fucked. And the lower they could bring it down before the reverse split, the lower the stock price would start after the reverse split. So $1.96 times 10 is $19.60. In the morning, AMC will be $19.60 a share. And it may take some time. It may take a few days. It may take a couple weeks. We may take some time still for us to see proper price discovery. But at some point here, between AMC issuing shares, the shorts having to pay out that settlement, the shorts having to pay me cash for my fractional shares due to the settlement shares of AMC, all of those things will cause an uptick in the price. How do I think the trillions of synthetic shares around the world will impact on the reverse split? And what price do you think it will move when we run? My friend, I can't read the future. I can't put a cap on it. But let's put it this way. $10,000 a share is now extremely realistic in my eyes. I'm not saying that's going to happen today, tomorrow, this week, this month, or even this squeeze, because I don't think that the mother of all short squeezes is coming right now. I think that a short squeeze is coming. I think that AMC will see massive volatility and a huge run-up in price in the very near future. But I don't think that this will be the mother of all short squeezes just yet. I think it will be another hiccup in what we've seen so far. It is simply a sign of the times as what's going on. As more liquidity is drawn out of the system due to the Federal Reserve's quantitative tightening, the M2 money supply is dwindling. The collateral value of many shorts books is decreasing because companies like Evergrande have just filed for Chapter 15 bankruptcy, and that means that companies in the United States and abroad cannot that are owed money by Evergrande cannot go after Evergrande. This is not good for prime brokerages and banks around the world. And a lot of people don't know this. Even Tether, I know that you're going to find this hard to believe, but Tether has massive positions in Evergrande bonds. And currently, aside from hundreds of other banks, hundreds and hundreds of other banks, including BlackRock and Vanguard and many others, all of the major banks have a huge number of Evergrande bonds. And they are currently still using the historical value, 100% of the value of those bonds as their trading value. And that will not change until the bankruptcy is fully complete. And then other companies and commercial real estate developers out of China and around the globe, like Country Garden and Shimao and hundreds of others in China, and then others in Germany and others in Canada and the United States and everywhere in between, will also become insolvent. And all of their bonds will be worth zero. These are stepping stones. Not one of these things will lead to the mother of all short squeezes, but the stepping stones, the dominoes, as they get knocked over one after the next, will lead me to the mother of all short squeezes. But for now, I will settle for a short squeeze based off of the issuance of shares by AMC on the open market, like what occurred in January and June of 2021. Because every time that AMC issues shares over the last 2.5 years, the stock price sees new highs. And I would not be surprised to see that by them selling 25 million shares on the open market, compared to them in 2021, June, selling 11.55 million shares on the open market, I would not be surprised to see new all-time highs. Not at all. And I will lick my ice cream before it melts. And I will take massive profits on my call contracts. And I will not sell a share unless I see the numbers that I want to see in my account. If my fucking portfolio does not look like an international phone number, I'm not selling my fucking shares. But I have thousands of call contracts with which to lick my ice cream before it melts. So if we see increased prices and volatility, I will gladly sell some of my call contracts to the market makers for a premium, a massive premium. And then they will be glad to take those and use those call contracts as a way of delivering themselves shares. Then I will take my premium and I will use a portion of it to exercise other call contracts that I have, further creating a need for broker-dealers and shorts and prime brokers to delta hedge. Delta hedge means buy more shares to make sure that they are hedged because of the increases in price. Then they will have to go out onto the market and buy those shares with which to issue to my account because I exercised my call contracts. That will lead to a gamma squeeze. And a squeeze in gamma leads to retail investors finding out. And retail investors finding out leads to FOMO buying, fear of missing out buying. And that will lead to an increase in implied volatility of the stock. And that will lead to a further increase in the share price because that will lead to further delta hedging by said brokerages and broker dealers and other funds, prime brokers. And that will lead me to further sell off more call contracts. And that will lead me to use more of that premium with which to exercise other call contracts. And then the shorts will have to pay me not only my shares, they will also have to pay me my settlement shares for the exercised call contracts. And then they'll also have to pay me the fractional shares and the settlement of 0.333 shares worth in cash on top of everything else. And it's a vicious cycle, and it goes around and around and around, higher and higher and higher, until AMC finishes issuing shares on the open market. In May, when they started issuing these 11.55 million shares towards the end of May, the stock price was at $10. And then when they finished on June 2nd of 2021, the stock price got up to $79 a share in intraday trading, and they only issued 11.55 million. Now, they're going to do a reverse split 1 to 10. That means harder to locate shares for them to borrow and short, and harder to locate shares for them to deliver to retail when they FOMO buy, and harder to locate shares when I exercise my call contracts, and a more expensive price for them to have to issue my settlements and my fractional share payments. It's almost too easy for me at this point. I'm absolutely fucking zen. And the call contracts are just leverage for me. I'll make plenty of money off my shares, but I'll get filthy fucking rich off my call contracts. Gas to G says, as long as there are FTDs and dark pools, nothing will happen. Absolutely nonsense. There's always been dark pools and FTDs, and the price still went to new all-time highs. In January, it went up by 1,300%. In June of 2021, it went up by 800%, and it's been heavily shorted. Meanwhile, the on-balance volume proves that retail is not selling. On-balance volume is at an all-time high, 5.4 billion. That's all-time higher. That's higher than it was in January of 2021 when the stock ran up 1,300 fucking percent. Timmy B says, thank you, hedge fucks, for giving me the opportunity to buy 3,000 more shares over the past couple days. Cheers, Timmy. We're going to be filthy fucking rich, my man. Too easy. And the reason that I'm so calm is because I know things about this stock and the stock market that most people can only dream of. And I didn't learn them overnight. I learned them over the last 20 years of investing in the market and finding out that the market is completely fucking corrupt. And that needs to change. That needs to change. And apes are that change. Retail investors that diamond hand a fucking stock that has excellent fundamentals and is profitable and has the ability to issue shares and pay off all their fucking debts in a matter of weeks, maybe even days. AMC could easily raise $17 billion by issuing these 25 billion. I'm sorry. AMC could easily raise $17 billion by issuing these 25 million shares on the open market. Easily. That would lead them the ability to pay off their $6 billion in debt and be completely debt-free and profitable. That would destroy the short thesis. And in addition, you know what else they could do after that? They could issue more dividends. You know who has to pay for those dividends? Shorts. Shorts always have to pay the dividends, and they are not entitled to receive them. Why? Because that's how the fucking stock market works. I want my fucking money, and I ain't selling till they fire Janet fucking Yellen. I told you, 2.5 years ago, I would have settled for $10 million in AMC. At this point, not even close. I'm looking for billions with an S. If you have any more questions, I'm going to take 2 more questions, and then I'm going to call it a night. I'm going to get some rest. In the morning, I start my trip off to Dallas, Texas. Like I told you guys, this house is being sold, and it's closing next week. It's been a fun time here. I love it here in Chicago. But it's time for Lit Exchange to move to the financial capital of America, which is Dallas, Texas, where Fidelity and Schwab and many other broker-dealers have their offices, and we're going to take all of their top talent. As a matter of fact, Charles Schwab announced yesterday that they're laying off many people to the tune of $500 million in savings. They need to lay off so many people in order to save $500 million in the next couple of years. And those people will be laid off in the very, very near future. And on top of that, I'm not just going after those, I'm going after their top tier talent with Lit Exchange. You can go to litexchange.com. There's no E at the beginning of exchange, lit, XCHANGE.com. Input your email address for information about our beta testing program, which is coming soon, our founders program, which is coming soon, with which we're going to offer you the opportunity to become an owner in the company. Imagine if you could have bought stock in Fidelity, for example, before they became a multi-billion-dollar company. We're offering the potential for huge gains. And this is not yet available. So this is simply an informational speech, not an offer to buy, sell, or hold any security of any kind. We are currently in the works with our attorneys to get the FINRA licensures to be a fully licensed broker-dealer in the United States of America. And once we do that, we will branch out to the rest of the world. Canada, Europe, South America, Australia, and so on. David Montgomery, what about the shares Adam Aaron's going to dump? I can't fucking wait. I hope Adam Aaron dumps a bunch of shares, because guess what that does? That causes more buying pressure. That causes the shorts to buy up those fucking shares because they desperately need them. Just like the last few times AMC has issued shares. Have you been fucking listening at all? Are you fucking retarded? No, that's an insult to retards. You're just fucking stupid. Congrats on the new pad. We're going to be so fucking rich, then we burn blunts. KLRB222, did you just super chat me $420? What the fuck, man? Why would you send me that much money? You could spend that on shares. You know what, though? Thank you so much. I am truly humbled and appreciative of you. Please, do not ever super chat me that much money again, man. That was too kind. Thank you very much. I look forward to being filthy fucking rich together when AMC squeezes in the near future. Thank you again, KLBR. It's too kind, my man. He says, congrats on the new pad. Then we burn blunts, my friend. Cheers to that. Any retail has been on the side of endless lawsuits. Yeah, the lawsuits are no worry to me, man. You know, I knew that this shit was coming. Do you think AMC will stay around its new price once it reaches its new all-time high, or do you think it will reach its all-time high and go down significantly again? Anytime a stock reaches new all-time highs, it has to go back down. That's just mechanics. That doesn't mean it can't reach an all-time high, come down, and stay at extremely elevated levels. Look at what happened to Tesla. Tesla, I don't know, a lot of people don't know this, but Citadel, the market maker and hedge fund, Citadel squeezed BlackRock in Tesla. And that's what sent the stock price running up to $1,000 a share on Tesla. And ever since, it's remained at extremely elevated levels. I wouldn't be surprised to see something similar happen with AMC. Say AMC theoretically squeezes to 1,000 a share, 2,000 a share, whatever. Might come back down to, 800 a share, 500 a share, 200 a share, whatever. But I still don't think it'll come back to $1.96 a share. No fucking way. There will be 10 times fewer shares on the market. Cost to borrow will be astronomical. The shorts are still fucked. So yeah, I do suspect it will go down significantly after it reaches new all-time highs. But I don't think it'll come back down to where it is, especially because AMC is profitable. And with the share issuance, they'll pay off all their debts. And in addition to that, they'll be able to output new dividends. They can't currently output new dividends aside from this current dividend that was forced by the court. The Delaware Chancery Court is forcing this settlement. And this settlement means that the shorts have to pay for this dividend. They have to pay for the shares. They have to pay for the fractional shares, period. That wasn't AMC's issuance, that was by the court. Now that AMC issues shares on the market and pays off their debts, the debt covenant that prevents them from issuing a dividend will be paid off and gone. And once that debt covenant is gone, AMC can issue whatever fucking dividend they want. And that's got to be paid for by the shorts. All right. I appreciate you again, KB, man. You guys are too kind. Joseph asks, why wouldn't the shorts cover today for $2, under $2? My friend, if the shorts started covering today under $2, the stock price would probably get to $20,000 a share and they'll be bankrupt anyway. They can't fucking cover. They cannot close all their positions. Because when you combine all of them and the contagion that will occur when just one of them goes bankrupt, they will all go bankrupt. That was proven by Citadel Securities bailing out Melvin Capital in 2021. If they hadn't bailed out Melvin Capital would have gone defunct, as would all of the other hedge funds that are short AMC and GameStop. Fuck, man. It's simple. Why don't people understand? They can't fucking close their positions. They can't fucking close them. They have no fucking choice. They're stuck until retail sells. Because 25 million shares from AMC is not enough for them to close out their fucking shorts. That's why they have to buy those shares. And that's why the price goes up higher when they do issue them. It's fucking simple, man. And I'll stick around until some sort of black swan comes along. Market crash, bond market crash, real estate market crash, commercial real estate market crash, fucking auto market crash, RV market crash, you fucking name it. M2 money supply crash, bond yield crash, precious metals fucking skyrocket, you name it. I could keep going for an hour about all of the black swans that could potentially cause a mother of all short squeezes on the stock market. Much like what we saw with Volkswagen when they went from $17 a share to $1,000 a share merely 13 days after one of the worst days in S&P 500 history in 2008. That was not by accident. Porsche owned 55% of Volkswagen. Porsche owned 55% of Volkswagen. That's it. Retail investors hold 85% of AMC. Volkswagen had a 15% short interest, self-reported. AMC has almost 29% short interest, self-reported. So it's a standoff. How the fuck do we get out of it, asks Bliss. I am going to continue to buy and hold and lick my ice cream, exercise my call contracts, and increase the number of shares. And I will keep doing that until I see an international phone number in my fucking portfolio. That's all. I think I've gone on for long enough. Because honestly, I could do this all fucking night, but most people don't have even the attention span to watch this video for 47 minutes and 13 seconds. The Giving Project says you're a shill. Pfft, you're a fucking idiot. You're a fucking moron. The shorts can't fucking afford me. None of them could fucking afford me. I've already got multi-million-dollar fucking companies, and I'm going for billions with a fucking S. They cannot fucking afford me, and I would never take their fucking money. Never. I'm not short AMC stock, and I will be happy after I make hundreds of millions, if not billions of dollars on the stock market off of AMC stock when I'm pushed in front of fucking Congress, much like DFV, Keith Gill, Deep Fucking Value, much like Michael Burry. Because when somebody makes this kind of money on a fucking stock, there are congressional hearings, there are court cases, there are attorneys, there are massive fees involved, and I have no fucking problem with that because I do not provide financial advice. I am going with my due diligence, and I'm not fucking wrong. So I don't care if it takes a few days, a few weeks, a few months, a few years for AMC to squeeze. I'm going to hang out as long as it takes. And when I do have to show up in front of court, I will be able to show them all of these fucking videos, all of my fucking tweets, everything on Reddit, everything on TikTok and Instagram and so on that I've ever put out there, and say I simply put out educational information. I didn't take a dime from anybody, and I did not short AMC and APE. I was long, and I'm staying long until they admit the price is wrong. I ain't selling till they fire Janet Yellen. Make sure you're properly hedged. I'm looking forward to some serious volatility to the upside and even to the downside, because that's the way the stock market works. When the stock goes down, I buy more. When the stock goes up massively and increases the implied volatility and my profits, I'll lick my ice cream before it melts. And then if it comes down again, which everything will, it always does, I will rebuy further positions and exercise some of my call contracts for more shares. Anyways, I wish you peace and wealth. Make sure you're properly hedged. Act accordingly, ladies and gentlemen. Whatever that means to you. Don't buy, sell, or hold simply because you heard me say something. Do your own fucking homework. Look up the OBV. Look up the short interest. Look up how short exempts work. Look about naked shorts. Check out shorts marked as long. Welcome to the real world. Shorts marked as long is going to blow your fucking mind. Look up ISDA contracts and tokenized securities and the way that they're used for share locates. Look up rehypothecations. Look up married and divorced puts and swaps, puts and calls. There's so much. So much. I could just go on all night. But again, now I'm at 50 minutes and 49 seconds. Let's get the fuck out of here. Have a great night, everybody. Peace. Thanks again. Appreciate you all. Much love, my friend.